I'm going to say a few things in the beginning while your attention span is at the highest. And usually people drop off after I start going on to and what I'm trying to teach you is the ebb and flow of these markets, where it's going to move from, what level is going to be important. If you're trying to push a trade entry within 9:30 to 10 o'clock gambling, okay? Is that clear enough for you? You're clearly impatient if you're pushing the button. And I know some of you are doing it. You're sending me messages in Telegram. I'm not going to tell you where to get in a trade. What I'm teaching you to do is observe price action. It's generic. That's the whole point of teaching this. And then when you're complaining that you're confused, you're complaining that you took a loss, which is exactly what I told you to do in your journal. You record those things. You keep them personal, private. The first 30 minutes, you're observing. You don't have the skill set or the ability to trade underneath that first 30 minutes. You don't know what you're looking for. You don't know. So what's the benefit of waiting for that first 30 minutes? That's the opening range. After that, the buy side and the sell side, they're going to be attacked. One or the other is going to be attacked. Think of it like the way I teach the Asian range in Forex. And it's going to feel like in the beginning, you're not getting anywhere. And that's absolutely normal. My pattern, my specific setup for the day or that morning session or within that particular fractal and price action may not be the one that fits you. I can't make it any plainer than that. Not everybody's going to trade. Nobody's going to say, hey, I like this guy trading the MACD right here and he's using pivot points. And I like this guy over here doing Elliott wave. I'm going to pick and choose whenever I feel impulsive to take which one I like at the time. That's a rookie mistake. And you're taking every point of reference that I'm calling out. Watch it. See if it respects it. We're inside the opening range, that first 30 minutes. But some of you don't want to take notes when you're watching my lectures on YouTube. You don't want to take notes while I'm giving you these rants, but I'm teaching you. The things that you need to understand are in these boring discussions. How do I know this? When do I know not to do that? It's when I'm talking to you. That's all you're doing. And the benefit of having done so is you're going to start seeing things that repeat, that your eye draws to. The thing that makes most sense to you at your present understanding, you're going to explore that. So that way your study on your own time is more beneficial. I'm trying to make you do this the most efficient way possible, but I'm a realist. You're watching how price delivers, how it moves from one point of interest to the next within a specific time window. Over time doing that, okay? Over time doing that, you will start seeing things that you don't fully appreciate right now because you've seen it multiple times. Me pointing to fair value gaps, just look at the trolls. Oh, it's cherry picked. But then when I'm calling them live and it reacts off of it, they are silent. If you're pushing a button or chomping at the bit, impatient to push a button to get some reaction on the things I'm talking about, when the only stage you're in right now is this tape reading. Tape, not a demo, not a paper trade, not a funded account, not a live count. If I'm talking about buy side liquidity in the first 30 minutes, what you're doing is you're weighing and measuring the ability for the price to want to get to that level. If it doesn't go there, what did I teach you yesterday? If it fails to go to a specific inefficiency, consequent encroachment, or buy side, if it's failing to get up there, it's showing you what? An unwillingness to go there. So what's it going to do? It's going to go the other direction. So you're weighing out what the market's trying to work which side of the opening range is it trying to work on. So how do you know within the first 30 minutes which side to trust? I gave you a 5-minute order block. Watch that. See if it wants to respect that. And I said, watch the volume imbalance. For the note takers, he did say when 3 PD arrays fail, you're going the other direction. You have to look at price with a lot of flexibility right now, not holding any expectation over yourself or the live streams or what you think you're going to be able to do a week from now. You can't think about it like that. You have to be flexible. Allow yourself to learn this, but you have to let me help you. You have to let that process unfold the way I'm teaching you. If you do not submit to this process, it's impossible for you to be successful in it. You're going to fail. If you're looking at anything in addition to the things I'm talking about in the tweets, is that a catalyst for you to want to push the button? If it is, if you're thinking, well, if this is what I've been in trade, you're doing it wrong. Don't ask me. Don't even bring it up. That's why I say focus on what it is I'm bringing your attention to and only that. In your own journal, you add all that extra stuff there. So you have to desensitize yourself now while everybody's doing the same thing. Nobody's better than the other. You're all in the same stage of learning. This year's mentorship is different. If you can't recognize that, even my charter members are thinking, this is something totally different. Yes, this is the brass tacks. But I also know that this type of training is going to weed out the people that are not going to do well, and it's going to do it quickly. But I don't want to see any of you fall behind. I don't want to see you fall victim to yourself, your own character flaws, before you have a chance to cope and manage them and replace them with more positive characteristics of a trader or speculator. The order block shouldn't do what? Shouldn't go past the mean threshold. What happens if it does? That's a warning sign. And I mentioned the volume imbalance below it. What happens if it goes through that? It can do that, but guess how many PD arrays now is failing too? And I said the bullish breaker. Well, if it goes below that and shows no willingness to support anything there, what is it indicating to you? It's going to want to do what? Expand lower, seek discount, plot it right on your trading view chart. And you'll see where I was pointing your attention to and how we are watching how it's going to reach to the next level. Then what are you supposed to do with that? What's the benefit? Once it goes there and I say, okay, screenshot this, what are you supposed to be doing? You're supposed to be looking at how much time it took before it repelled away from that level, started gravitating to another level within 5 handles. Does it offer a range of 5 handles? If it does, was there a setup in there that you can identify? Well, in the fair value gap that I mentioned this morning, using the 650 candle, time candle, 10 minutes to 7, basically, in New York local time. I mentioned I want to see that fair value gap act as resistance. Then the market does what? Creates a up close candle into that fair value gap. Market moves away, comes back up again, and it spends multiple times trading into the midpoint of that up close candle. For those that have had the charts in front of them, it's the 10:05, 5 minutes after 10 candle this morning. That one singular up close candle. And the subsequent candles after that, it was trading up into both the fair value gap low from 650's candle. And then we had what? Expansion, reaching down into the fair value gap I mentioned below it, seeking what? Discount. That candle is formed at the 650 time candle on 1 minute chart. It trades down to it and then blows out the low. And I said, you want to screenshot this and label it 50% of the trade off here. But I didn't take a trade. You didn't take a trade. Oh, what are we doing with all this? You're conditioning yourself and you're logging it. When I teach you how to journal, I told you you're giving yourself positive self-talk. You are conditioning your subconscious after the fact using the points of reference that I'm giving you real time as the chart creates these specific things and it draws to the levels I'm talking about. You're screenshotting that. And then you're adding all your observations later on. Not then. You don't have time to do that. You're watching price. At 9 minutes after 10, that fair value gap on the 1 minute chart, it comes back, reprices to that, does not come back up to the fair value gap formed at 7:05. So 5 minutes after 7, that candle, that's your fair value gap. That was the one I drew your attention to first, below the breaker, below the volume imbalance, and below the 5-minute bullish order block. So we saw price spend majority of the time within the first 30 minutes in the upper 50% of that 30-minute range from 9:30 to 10 o'clock. And it did what? It failed. It failed to take 40/20.75 buy side. It couldn't do it. And then it showed a willingness to do what? Go out below the low of the first 30 minutes of trading. So what we're doing is we're giving the market time to run on buy side. In the first 30 minutes, you don't know what it's going to do. You don't know. So how do you learn to trust these things, ICT? How do you do this and how do you do that? By doing what I'm walking you through in these tweets or in the live sessions, because you don't have the experience to know what to do in that first 30 minutes. So the first stage of your learning is submit to that first 30 minutes. That's part of this. That first 30 minutes is much like a Asian session in Forex, whereas Asian range, rather not Asian session, Asian range is several hours in length and time. But the first 30 minutes after midnight New York local time, that's an opening range too. But at 9:30, I'm looking at that opening range. And we've had a large trending day yesterday. So the next morning session is going to be more difficult than it would be on another day. So you have to have a filter, a time filter. You allow for that first 30 minutes. But what happens if it takes off and runs 25 handles? It's okay to make a mistake. If you have an opinion about, okay, Michael's saying watch this level here, and he's pointing out something below the marketplace. Okay. So is it showing me anything in there that would lead to a trade? If you don't see it and price moves, you'll go back and find it in hindsight. And that's still learning on my own chart. I am not putting things out there that are ambiguous, that mean nothing. I'm drawing your attention to the very specific things that I'm utilizing to determine a bias within a narrative. The first 30 minutes, if I don't know right away what it's going to do, I'm submitting myself to that first 30 minutes myself. I'm doing that. But if I have an inclination that it's going to do a specific thing, run for a liquidity, run for an imbalance, then I'm going to go right in there. And as soon as it does it, if it's in the first 30 minutes, I'm in there. I'm doing the trade. But we have a large range day yesterday, and everybody's going to want to do what? Jump on board. So the market will, most times, not always, most times, reach for some measure of buy side. Why? Because if it's going to go down, like I said yesterday, it can go up the purge buy side to allow smart money to assume shorts against that buy side liquidity. I was offering the market the opportunity to present to me and you. If it doesn't reach there and you're in the first 30 minutes, nothing has happened. I gave you 3 specific PD arrays to watch and observe. But if I say order block or fair value gap or volume imbalance, if you're here to find something to talk about that didn't happen correctly, you're going to have a whole lot of opportunity to do that erroneously. Not everything I'm referring to is an entry. There are measuring points, balance points, points of reference. That way we see what is the ebb and flow of price. Is it respecting this level? Is it not respecting it? If it goes through it with a lot of speed and magnitude, that is also a characteristic that is important. When we had price return back to that fair value gap at the 9 minute after 10 candle, 1 minute ES, came all the way back up, touched the bearish order block, spent about 4 or 5 candles in there, and then repriced lower, then made the lower low. As it was dropping, I said that we want to see it go through the fair value gap from 650 time candle and then offer, if it comes back to it, resistance. Now it went through the initial low at 1015. So once it takes out that low, we're not interested in seeing it return back to that fair value gap then, because we've expanded and made another lower low. So there's no need for it to come back to that fair value gap that's formed on the 650 candle. To come back to that level is problematic, which is why I said that hypothetically your stop loss on this idea would be 4000.5 or 4,001/2 of a point, to which it returned back to, but not before trading to 39.91 to offer a partial near the low. So 50% of the trade idea that you're logging, what did you see? For some of you, you're going to see the consequent encroachment of the low in the candle formed at 930, 938 rather, sorry. And the market trades up into that fair value gap I mentioned around the 4,007 levels, what it is price-wise, but the actual candle for the fair value gap is at 5 minutes after 7. Some of you may see that retracement back under the fair value gap after it made the lower low. That's your optimal trade entry, leaving the range of that first 30 minutes, not expecting it to come back into it. It doesn't need to. It's done its work by staying in the upper half of it and then failing to go to buy side. It ran out below the low. Okay, so what does that tell us? From a narrative stance, it says it's going to be seeking discount. Price will explore going lower into inefficiencies that's your fair value gap that was below price, and then the old low. And then once we went through them, 50% of the trade comes off. Why? Why? Because it could go down and take the low, make a lower low, put people on the wrong side selling short on a breakout, and then come all the way back up against the entirety of the daily range. But because we had what? 2 stages of offset distribution. That means the market rallied above the buy side above 40.15. Those highs at 840. Looking at your 1 minute chart, look at the bottom of the chart at 08:45. Go straight up from there. Just to the right of that, you'll see there's relative equal highs on a 1 minute chart. That's a buy side liquidity pool there. The market rallied above that, but failed to get to 4020.75. Spent the majority of the time in the first 30 minutes in the upper half of that range. What range? The opening range, which is the first 30 minutes of trading. If you don't have a hard line bias, if you don't know exactly what you're doing, you wait that first 30 minutes and you just let price tell you what it wants to do. You're tricking your brain into thinking you knew this in advance. When I'm calling it beforehand, I'm lending my experience to you. I'm lending it. I'm prompting you to do the things that if you would have known how to do this, you would be seeing this very thing at that instance in time. That very second, that moment in time, this is the part that you should be observing at that moment. So since you don't have that skill set or the understanding of it, that's what tape reading is. I'm literally prompting you to pull out at the very specific times when price is doing certain things that's going to be helpful to you, which leads to what? Understanding how the market moves from one PD array, from discount to premium, from premium to discount, one PD array to the next. And you want it your way, delivered the way you want to hear it. And the people that know how to do things, we know how to teach it. We know how you're going to learn it. And certain things need to be experienced, not taught in a book, not shown in a video. You have to put your nose in it. You have to handle it. You have to fondle it and feel like, okay, this might work, and then it doesn't work. Okay, I got my hands and eyes all over this, and it doesn't work. What do you feel from that? And you're squeezing and grinding your patience against these candlesticks as I'm buying in a market that was already going to go up anyway. That's not skill. Well, a real loss if you do things recklessly, which is why I mentioned, if you had a child that you had to take care of, and every trade that you took had an impact on whether that child would eat or not. I'm not trying to communicate a way for you to be stressful about taking your trades. That's not that's not what I'm saying. What I'm saying is if you're trading for a living and you're trading an account that is only there to make your ends meet, you have other accounts that you use to speculate and grow wealth with. I'm talking about one account that you use to get your ends met, whatever that grocery bill is. You're not. You're not going to look at that candlestick if you're responsible. If you're a parent that cares for that child and wants to weigh out risk and not do things impulsively, you're not going to just push the button because you have time to do so. You're going to be more diligent about what it is you're doing to manage that risk. You're going to look at the charts and think to yourself, why am I going to take this trade? Every trade that you take is uncertain. There's no guarantee it's going to pan out. But you know exactly what you're doing when you're goofing off, pushing the button when you have no business doing so. You can't do that when you have a real responsibility attached to it. You have to make your trading realistic. It has to be practical. It has to be measured in a practical, realistic way. And the only way you can do that is by doing what I teach you. Keep it in the beginning away from the money. And it takes a lot of discipline to keep doing the right things all the time and not do the wrong things. Some of you young guys can look. I love the way her ass swishes to the left and the right when that candle and that forms. And it hits a little bit different now, doesn't it? You have to fall in love with this, folks. It has to be a passion that nobody outside of you, unless they're a trader, is going to understand. But when that happens, success is just a matter of time. You won't look at these small little speed bumps in the beginning where you feel like you have to compensate for feeling not like you're producing anything of value or progress. In the beginning of anything, weight loss, weight training, martial arts, flexibility, none of these things can be seen in the early stages right away. It hurts many times because you're putting a lot of effort in there. I'm going to close it on that. I just want you to know that there's a right way to do this and a wrong way, and I'm trying my best to keep you on the right path. And if you've maintained this entire conversation, stayed with me this entire time, you probably got the right mindset for it. Until next time, be safe.